Okay, so let's start with a super quick revision of warehousing chapter. Very simple, very small chapter, important from exam point of view, definitely yes. Okay, so now as we already know that whenever we import the goods, there are two options mainly with us. Either you clear the goods for home consumption or you keep it in the warehouse. So that warehouse part we are going to talk here. Now we know that the benefit of keeping in the warehouses at the time of import or at the time when the goods are kept in the warehouse, those can be kept duty free. You need not pay any duty on the same, but only when you are clearing it for home consumption, at that time you are required to pay the customs duty that we are going to study in this particular chapter. Now, section number 57, 58 and 58A talks about the types of warehouses. There are three types of warehouses. First one is section number 57 talks about your this in your public warehouse. Public warehouse is such a warehouse where which is licensed under section 57 and where the goods can be kept by any goods can be kept by the importer, not necessarily the goods which he has imported, only those goods can be kept. In case of private warehouse, which are notified, which are licensed under section 58, there only those dutiable goods can be kept by the licensee which are imported by him. Okay, only if there is a particular importer who has himself imported the goods, only those goods can be kept in the private warehouses. And to add one more point, in these private warehouses, even manufacturing and other operations are allowed, which we are going to study it further, which is not allowed in public warehouses, right? And the third type of warehouse is going to be your special warehouses. Special warehouses are under the lock and key of the custom authority, where generally some notified goods which are notified by the CBIC, like gold, silver, precious metals, etc., these items are kept and which are totally under the control of the customs authority. Are you clear with this? And the license which is given here to the licensee, this does not have a specific validity period. This will be valid unless it is surrendered or it is cancelled. Okay, surrendered means when we do not have anything for this import, export, etc., then in such case we are going to surrender it. Okay, then in such case we are going to surrender it. But suppose if we contravene any provisions of the law or if we contravene any conditions which are attached to this particular license, then the principal commissioner or the commissioner, after giving us a reasonable opportunity of being heard, it can cancel our license. Okay, now sometimes it can so happen that it can directly cancel our license, or sometimes it can so happen that it is doing some inquiry and on the basis of that inquiry it may cancel our license. Okay, suppose if inquiry is going on at that time, then it will suspend our license. Okay, it will not cancel our license, but it will suspend. And if our license of that particular warehouse is suspended, then you cannot deposit any new goods in the warehouse, or directly clear it for home consumption, pay the duty on the same. Okay, now listen, once the license has been cancelled, then within a time period, the day when you receive the order of cancellation of your license, from that day, within a time period of 7 days, you have to vacate that warehouse. Okay, means you have to remove the goods from that warehouse within a time period of 7 days. Either deposit it in another warehouse or you clear it for home consumption, doesn't matter, but within 7 days you have to take the action. 7 days or this time period of 7 days can be further extended. Very clear with this? Okay, now listen. Now going on to another part altogether, section number 59, which talks about the warehousing bond. Now they are telling that we know that the benefit, okay, that if you're keeping the goods in the warehouse, then it is duty free. Means for the timing it is duty free, means you are not required to pay the duty on the same when you are keeping it in the warehouse, but when you remove it from the warehouse, at that time duty becomes payable. So government has that insecurity, or government has that threat that there can be a loss of revenue to the government. Means the person may not pay the customs duty, the person may not pay the interest penalty, if any, etc. So government says that I want a bond. Okay, I want a bond plus security from you, that suppose if you don't pay the duty, if you don't pay the penalty at the rate of 100% of the duty, or if you do not pay the interest, other charges, then the government has something with itself in the nature of a bond, which the government can execute if it needs to recover the money from you. Okay, now there are two types of bond. One is your consignment bond, as you can see here on the board, and the second type of the bond is your general bond. Okay, consignment bond means which is specific to a particular consignment. Means I am such an importer. As of now, I have imported 1000 kgs of a raw material. Then for that 1000 kgs of raw material, I will sign a bond which will be equal to thrice the amount of custom duty. Okay, on that 1000 kgs of consignment which I have imported, let's say custom duty comes to 1 lakh rupees. So 1 lakh multiplied by 3. So 3 lakh rupees of bond you have to sign and you have to give it to the government. Why 3 times, ma'am? Okay, one time is for the duty payable. Okay, second 100% is for the 100% penalty that is applicable, and plus some extra amount for interest and other charges. So 3x of the custom duty amount, this much amount of bond you have to sign and give it to the customs authority, that suppose if at all you default in any payment, then the government will use this bond to recover the money from you. And the second type of bond which is coming up here is your general bond. Means let's say you are such an importer who keeps on importing multiple times. Okay, who keeps on importing multiple times. So they say that we will keep a running bond. Okay, that is they will give you the amount of bond depending upon your past imports, depending upon your future estimated imports that you are going to do, that they will give you an ad hoc amount of bond. Let's say they tell you please sign a bond of 10 lakh rupees. Okay, so now you have given a bond of 10 lakh rupees which the government is going to keep with itself for the imports that you are going to do. Okay, and you are required to maintain a running account. Okay, you are required to maintain a running account. Let's say I have signed a bond of 1 lakh rupee. So as soon as I sign a bond of 1 lakh rupee and I give a bond of 1 lakh rupee, that 1 lakh rupee gets credited. Okay, means now I have a balance of 1 lakh rupee bond with the government. Now let's say if you have imported goods worth rupees, on which custom duty is equal to 20,000. So can we say 60,000, 20,000 multiplied by 3 times, 60,000 is going to be utilized from this running account. Means 60,000 is now kept as security with the government. Okay, let's say now these goods are cleared for home consumption. Means the bond amount again gets free. So the 60,000 will be credited to the running account. Again, you have got a balance of 1 lakh rupee in the bond, and so on and so forth. This account goes on running. Are you clear with this? Yes. Okay, then going on to the next one, that is section number 60. Section number 60 says that once you have furnished the proper security, once you have furnished the proper bond, etc., then the proper officer will pass the order that yes, you can now take the goods from the custom station and you can deposit the goods into the warehouse. That was given under section number 60. Section number 61, super duper important, very nice section, very important section. Section number 61 says that for what period can you keep the goods in the warehouse? So they say that normally warehousing period means what? Warehousing period is the period for which the goods are kept in the warehouse. So now they are telling that if we are going to keep the goods in the warehouse for manufacture and other operations, means I've kept the goods in the warehouse and I'm doing manufacturing or other operations on the same, then there is no time limit. Okay, then there is no time limit. Or if the goods are going to be kept in the warehouse by any EOU, export oriented unit, EHTP, STP, means who are engaged into export, etc. For them also, if they are keeping the goods in the warehouse, there is no time limit applicable. That is till their ex-bonding. Till the time they want to remove it from the warehouse, till that time they can keep it in the warehouse. We do not have any problem. Okay, and in all the other cases, important, in all the other cases, warehousing period is equal to 1 year. Okay, 1 year from the day when the proper officer had passed an order for transferring the goods to the warehouse, for transferring the goods from the custom station to the warehouse. The day when he had told, okay, you can take the goods to the warehouse, from that day for a period of 1 year. For 1 year, you can keep it in the warehouse. Okay, and this time period can be extended by another period of 1 year, or it can be reduced also depending upon the shelf life of the goods. Are you clear with this? Okay, so ma'am, for 1 year from the day when the officer passed the order for transferring it to the warehouse, for 1 year we can keep it in the warehouse, and can we be relaxed? Answer is no. Okay, for the first 90 days in that 1 year time period, for the first 90 days you can keep it. For the first 90 days from the date when the officer had passed the order for transferring it to the warehouse, you can keep it interest free. Okay, you can keep it interest free. Are you clear with this? Okay, as soon as your 90 period gets over, as soon as your 90 days period gets over, that is from 91st day. From 91st day, interest meter is going to start at the rate of 15% on the customs duty. Okay, means even though they are telling you can keep the goods in the warehouse for a period of 1 year, in that 1 year, only the first 90 days is interest free. After 90 days, interest will be, you can still keep it in the warehouse, but then at the time when you remove it, at that time interest will become applicable from the 91st day at the rate of 15% on the duty amount. Are you clear with this? Yes, acha. But what if the goods which you have kept in the warehouse? Okay, what if the goods which you have kept in the warehouse, if there is no duty payable on those goods? See, if there is no duty payable, then how will you do the interest calculation? Even the interest amount will come to zero. Okay, so it was decided in case of Pratibha processors that if there is no duty payable on the goods which are kept in the warehouse, then there cannot be any interest also applicable on such goods. Are you clear with this? Yes. Acha. And can we say also in case of goods which are kept for manufacture or other operations, or in case of UU etc. also, since there is no time limit for what time period you can keep it in the warehouse, then in that case also there will be no interest applicable whatsoever. Right? And the last point says that, do you recollect, I had just now told you that whenever we are removing the goods, okay, we have discussed this in the earlier chapter also, that whenever any warehouse goods are now getting removed for home consumption, then custom duty will be payable at the time of removal for home consumption. On which date's rate of duty are we going to consider? The date when we are presenting the ex-bond bill of entry, on that day whatever is the rate of duty, that will be payable. But what if you did a default of section number 72? Ma'am, what do you mean by default of section number 72? That is, the goods were not removed in that 1 year time period or that extended time period. If the goods were not removed from the warehouse, means there is an improper removal of goods from the warehouse, then in such cases the rate of duty, okay, important, you have a question also on this, we have done it in our normal lectures. Okay, rate of duty will be the date on which that period expires, means whatever was the last date, okay, whatever was the last date when the goods should have been removed from the warehouse, that is that 1 year time period or that extended time period, whatever was the last date on which the goods should have been removed from the warehouse, on that day whatever was the rate of duty applicable, on that rate you are required to pay the customs duty. Are you clear with this? Yes. Okay, then after that, going on to the next one, that is section number 64. 64 is very simple. Okay, section number 64 is very simple. 64 says that even though you have kept the goods in the warehouse keeper or the custodian is just going to take the care of your goods. Okay, he is not the owner of the goods. So as owner of the goods, you have certain rights over your goods. Okay, can we go and inspect the goods? Yes. Can we go and check? Can we go and ensure ourselves that the goods have not been damaged or the goods are not deteriorated? Yes, you can check that also. Okay, next one. Can we even sort the goods from one place to another, type of goods kept together? Yes, you can do that. And can you show the goods for sale? Definitely, yes. You can show the goods for sale also to any of your prospective customers. Just that you cannot remove any goods from there. Okay, if you want to remove any goods, no problem. File the ex-bond bill of entry, pay the duties, etc. and you can remove. Otherwise, you have got all the rights. Okay, otherwise you have got all the rights over your goods. Very clear with this? Yes. Okay. Then going on to the next sections, again super duper important, section number 65 and section number 66. This is talking about that manufacturing and other operations. Okay, now what are they telling for the section number 65 and 66? They are telling that suppose if you have imported any raw material, okay, like the example which I had given you in the main lecture, I had imported plastic, and out of this plastic I have made this particular remote. So can we say my raw material is the imported raw material, that is plastic, and I am going to manufacture AC remote out of the same. Okay, and this manufacturing is being done in the custom bonded warehouse itself. So now they are telling that suppose if you have used that plastic and you have prepared the AC remote, and this AC remote you are going to export it from the warehouse itself, then whatever is the import duty on the plastic, okay, import duty on the raw material which was imported on the plastic, that will be totally remitted, means no need to pay any import duty. If paid, then it can be refunded back. Right? And suppose if I use this plastic and I prepared the AC remote, and now I am going to sell it in the domestic market. Okay, now I am going to sell it in the domestic market. Then whatever was the import duty applicable on the raw material, okay, whatever is the import duty applicable on the raw material, that you have to pay. And plus when you are selling the finished goods, at that time GST will also be applicable. Okay, you are selling the finished goods from the warehouse. So in that case, into the DTA, then at that time it will be considered as a supply as per GST. So GST will be applicable on the finished goods. Import duty will be applicable on the raw material. GST will be applicable on the finished goods. Are you clear with this? Okay, then I have written here, also refer section number 66. I will just give you the reference of section number 66 here itself. Sometimes it happens that, let's say plastic, Okay, the plastic which I had imported, this was taxable at the rate of 28%, and the AC remote which I have ultimately prepared, that is taxable at the rate of 18%. Let's say, for example, something like this has happened. Then can we say you will be under pain now? Because now when you are clearing the goods into DTA, then you are required to pay the import duty. That import duty will be payable at the rate of 28%. Okay, whereas if you would have imported the raw material, if you would have imported the finished goods, okay, if you would have imported the finished good, that would have been taxable at the rate of 18% under customs. So as per section number 66, central government has the power that it can reduce the rate of duty on this particular plastic imported if it is necessary in public interest. Means either it can say that 18% will be payable, or it can say that something less than 28% will be payable. Okay, that is given under section number 66. Okay, now coming back to section number 65. So 65 subsection 1, 65 first part is talking about when we have imported the raw material, when we have done the manufacturing in the custom bonded warehouse, and either we are exporting. If exporting, no duty will be payable. If we are selling it in the domestic tariff area, then in that case, normal import duty on raw material will be applicable and GST will be applicable on its sale. Right? Then going on to the next one, that is section number 65 to again important. Now it can so happen that while you're preparing this, while you're manufacturing this AC remote, at that time there is some waste or scrap that is generated. If there is some waste or scrap that is generated, then what will be the import duty applicable on that waste or scrap? Because can we say that waste or scrap that is generated that has that raw material which was imported? Then what about the custom duty on that waste or scrap? So here, first thing that they are telling that suppose if the waste, scrap, etc. is exported, then no custom duty. We cannot ask, because this is just like you are exporting the finished goods. Okay, so part of finished goods, waste, etc. is exported, then there will be no import duty applicable on that scrap. Okay, now another thing is, let's say if you are exporting the finished goods. Okay, you are exporting the finished goods and whatever scrap had come out that you have destroyed, then they are telling that we are not at all concerned, then there will be no import duty on such waste. Okay, suppose if you have exported the scrap, okay, exported the finished goods, exported the entire remote, okay, and whatever scrap was generated that you have sold it in the domestic tariff area, means this product is gone, this is gone outside India, but whatever scrap was that you have sold it in the domestic tariff area, then import duty will be applicable as if waste has been imported from the other country. Okay, at the rate which is applicable to that waste, at that rate it will be taxable, because finished goods is gone, raw material is consumed, waste that is left that you are just bringing into India, then it will be considered as if you have imported that particular waste. And the last case, which is very, very important, what if the finished goods is also sold in DTA? Okay, imagine finished goods, you are selling it into DTA, plus waste or scrap is also coming here into India. Okay, then they are telling that on this waste or scrap, if it is sold in the DTA, then customs duty will be applicable. At what rate the custom duty will be applicable? Custom duty will be applicable at the rate which was applicable on the plastic. Can we say we have got the scrap of the plastic only? So there is some plastic which is contained in this scrap. So whatever rate is applicable to that plastic, at that same rate this waste will be taxable. Are you clear with this? Yes. Okay. Then we have got certain examples. We have already done it in the class also. Then going on to the next section number 66, we have just considered, I gave you this example of 28% and 18%. Going on to the last few sections, section number 67, 68 and 69. 67, 68, 69 says that whenever you are removing any goods from the warehouse, it can be removed only for three purposes. One is that you can see here on the board, that is you can transfer it to another warehouse. Okay, that can be done as per section number 67. You can transfer it from one warehouse to another, but please do it under proper inspection. Right? There should be no leakage of revenue to the government here. Okay, second reason why you can remove the goods from the warehouse is because you want to clear it for home consumption. So normal, by filing the ex-bond bill of entry, by paying the duties, etc., you can clear the goods for home consumption. No problem in that. Okay, and last one is if you want to export the goods from the warehouse itself, then no problem, you can export. If export duty is payable, you can pay the export duty. Okay, you can file the shipping bill, bill of export, etc., and you can do the export from the warehouse itself. Are you clear till here? Yes. Then going on to the next one, that is section number 70. Section number 70 talks about allowance in respect of volatile goods. Allowance in respect of volatile goods means sometimes it can so happen that there are some goods by nature, those goods get evaporated. There is a normal loss, naphthalene balls, kerosene, etc. Okay, normal loss is there and some quantity gets reduced. So the quantity which was written in the into bond bill of entry, that can differ from the ex bond bill of entry. Okay, so they are telling that whatever difference is lost due to its nature of the goods, on that the duty will be remitted. Yes. Then going on to the next one, that is section number 71 and 72. 71 and 72 very, very important, which talks about improper removal of goods from the warehouse. So 71 says that you can remove the goods from the warehouse only for those three reasons: for transferring it to another warehouse, for clearing it for home consumption, or for the purpose of export. Only you can remove the goods from the warehouse, not otherwise. Okay. If you remove it otherwise, then you will be thrown to section number 72. Okay, ma'am, when are we thrown to section number 72? One is when we have contravened section 71, that is we have removed for any other reason, or if you could not remove it within that 1 year plus that 1 year extended time period, if you could not remove it, then it will be considered as improper removal. Or if you did not maintain a proper running account of that bond, remember running account of that bond to the satisfaction of the proper officer. If any of these conditions or any of these cases come up into picture, then it will be considered that you are falling under section number 72, means there is an improper removal of goods done. Ma'am, what will happen? What will happen if there is any improper removal of goods done? Then in that case, the officer will ask you to pay full amount of duty, interest, fine, penalties, whatever is applicable. This he will ask you to pay. Suppose if you are not paying, even after receiving notices, etc., then proper officer has the right to detain and sell your goods which are kept in the warehouse. Are you clear with this? Okay, so three cases. First one, when you have contravened section 71, that is you have removed the goods for any reasons other than those three reasons. Second one, when you have not removed within that given time period of 1 year plus extended time period, whatever it is. And third, if you are not maintaining a proper running bond account as per the proper officer, then in such cases it will be considered as if you have removed the good improperly. If you have removed the goods improperly, then whatever is the amount of duties, etc., interest, penalty, fees, that you have to pay it to the customs authority. Yes. And then section number 73 and section number 73A. Section number 73 says that as soon as you pay the full duties, interest, etc., and the officer is satisfied that you have done all the formalities, then the bond which you had given earlier, consignment bond or general bond, that will be totally cancelled. It will be considered as if you have discharged the liability and it will be totally cancelled. And last section, that is section number 73A. Section number 73A says that whenever you are keeping the goods in the warehouse, you are not going to sit in the warehouse continuously. Okay, you are going to appoint a person called as warehouse keeper, who will act as a custodian, who is required to maintain all the records, who is required to maintain all the documents manually, electronically, etc. But you will still be considered as the owner. Okay, so if there is any mistake which is done by the custodian or by the warehouse keeper, he will be liable for punishment. That is a separate thing. But for taxes, etc., the licensee will be liable, or the importer is going to be liable for the same. Are you clear with this? Yes. So this was the super quick revision of all the important provisions, or rather all the provisions of our warehousing chapter. I hope you are understanding. Do let me know. Thank you so much.